Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, March the 11th. So, headline off of Zero Hedge. Angela Merkel expects 60 to 70% of Germans to be infected with coronavirus. That equates to about 53 million people. These headlines are all over the place. Lockdowns, and really scary stuff. And that's not to say that I'm not hearing it. Concerns or instances in my state of New York where people are becoming infected. But when I step back and I'm really open to somebody just sitting down or just explaining the numbers to me, because when you take a look at the world population at current 7,770,000,000, and you take a look at the coronavirus cases that admittedly, that are reported, perhaps we have twice as many not reported. Um, and you look at the deaths, 4,300, and you have headlines talking about, good morning, Pat. You have headlines talking about locking down the United States. You have Italy, which is on lockdown. You have a lot of countries that are on lockdown, and the government's taking a lot of steps. And this is going to come off sounding conspiracy theorists, so be it. I'm just not understanding the numbers here. I'm sorry. I just don't get it. We're assuming that unless this is a weaponized disease, that this is going to be a flu like none other that is going to work 24/7, 365 days a week for God knows how long to infect 60 to 70% of a population. This has been around for over 3 months now, yet we are talking about 119,292 cases. Please, somebody leave a comment, walk me through the numbers, because I'm not getting it. But I'm open minded. So we're seeing stock market futures down this morning. And here's a headline. This explains. This is typical Pelosi. If you go back, if you're not uh, an experienced trader, if you weren't trading back in 2007, 8, 9 during that nightmare, Pelosi, uh, she played coy, and the markets took their toll out on Congress because they delayed a package. They held up the Treasury and the Federal Reserve from getting what was $700 billion in bailout money, and the markets had a hissy fit. So stocks tumble after Trump claims Pelosi won't be ready this week. Typical Pelosi. Here we go. Deja vu all over again. Won't be ready this week to meet on fiscal plans. I guess she's got to have her hair done. So not much else to talk about other than the headline here. Stocks plunge into red after trading limit up overnight. Treasury yields lower. We already know that. We're rolling over. We're off the lows of the session, though. Let's go to the charts. I know that most people don't want to hear me blabber on here. Pat, election year. They need to bring the markets down. What else do they have? To bring the markets down is fine. I would agree with you, Pat, but only if they have a big rally up and into election day. Uh, if they're not trying to undermine the president, and there's more and more theorists out there, and one guy, his name is Berman. His name is on Twitter, Sam Berman, something like that, and he's an oil analyst, and he predicted that he stated that he believes that this was as I mentioned yesterday, this is a follow-up, and I'm going to find that tweet, uh, that he believes that this was Putin's war on the Western credit markets, and he hit us at the perfect time, and he may be right. So bravo to for Putin if that was his plan, because he certainly did a nice job. Let's get to the charts. Okay, we'll begin with the U.S. dollar, which for whatever reason was very strong yesterday, and we are giving up a little bit of gains today. This is a 4-hour chart. These will all be 4-hour charts. So what we'll be looking for is a break below support. And normally I look at the US dollar for correlation with gold, but frankly, that correlation is broken down of late. A lot of correlations are broken down of late, and it's hard to really gain confidence of as to what to watch to validate whether or not your decision to remain long is an accurate one or not. And I went over this with members last night that the correlation between even the gold miners and gold has diverged these past several trading days, with the gold miners trading more in tandem with the S&P 500 than it is with the price of gold. So watch for a breakdown here. If anything, it should help the price of gold to the upside. Good morning, Rich. Speaking of gold, let's go to it. It was up earlier. I think it gave back some of those gains. I think we're going to do a retest of a breakout point. So yeah. So again, 4-hour chart. I was watching this overnight. As you might note, I cleaned up these charts a little bit because I was starting to get a little bit nuts with all these lines. So we broke out overnight. Not exactly what I would call a retest here, but uh, a semblance of one. I'll be looking for a continuation move higher over the morning's highs, which is at 1666.9. So it's good to see that it appears as though, at least in the short term, we have stopped putting in lower lows, and we're making an effort to try to move out to new higher highs. And this bar here only opened up literally 8 minutes ago. This is a 4-hour chart again. And RSI, let's pull back here. RSI has broken out, has pulled back, and is beginning to put in higher lows. So a little bit of light perhaps at the end of the tunnel for gold, but a lot of overhead supply here. Now, let's take a look at how they're pricing NUGT this morning. This is the gold mining, leveraged gold mining ETF. And you can see they tried to rally it overnight through this yellow line, which they did technically, but we were rejected at the, this has got to be on very light volume here. Yeah, 6,500 shares. Rejected at the 2664 level. So I'm worried about a continuation breakdown below this lower band of support. So we'll be looking to, hopefully not, but looking to perhaps lighten up on this trade today. Because if the markets continue to sell off, you're going to see the miners probably sell off with. That correlation's pretty firm of late. People are looking to free up capital. and they'll free it up where they can. And then as this market begins to bottom out, you'll see a new round of leadership emerge, and that'll probably be the gold and gold mining trades. So, being early to a trade is equal to being wrong at times. So let's just keep an open mind and appreciate the fact that we have some apathetic morons during an election year in Congress that are in charge of our future right now. And the more that they drag their feet and drag out this stimulus package, well, the more pressure is applied to some of our positions. All right, so you can see that the S&P 500 here, we are putting in higher lows despite the fact we're down 1.5%. No, not we have reversed off the lows of the session. So let's look for a continuation move higher here. I'm trying to be optimistic. But really, folks, this is a market, this is an economy, a global economy that is addicted to the heroin that is provided by the federal government. And the only way to get a rally going here, from my perspective, is certainly not going to be organic growth. It's going to be more injection of stimulus. And until we get it, you're going to see pressure on this market. Any rallies are rallies filled with hope. Scary times. You lightened up in the after hours, Peg? I don't blame you. Bank of England just cut rates. Europe is up, but the markets are sinking. Europe is up, but the U.S. U.S. markets. Okay, I see. Yeah, I think that's consistent with what I'm saying. I don't think a rate cut's going to do it here. We already did that rate cut, half basis point cut several days ago. I think the Fed was premature. They were premature. We need a fiscal package now, and what the credit markets are looking for right now, what the stock market is looking for right now, is a backstop to all the bad credit that's out there. There's a lot of triple B rated debt that could be downgraded to junk status. That is what the market is concerned about. It's all about the debt market, folks. Have little doubt about that. Let's take a look at the NASDAQ. The NASDAQ as well, trying to put in here a higher low, despite the fact that we're down over 1.5%. Again, I'm trying to put a silk hat on this as much as possible. But I'm drawing these lines for a reason. If we start seeing breakdowns below them, then I'll worry about my downside and let the upside take care of itself. If we see a breakdown below support levels, we're going to have to adjust positions accordingly. This is not about coming on and saying I made $300 day trading like these other guys on YouTube. This is about preservation of capital. I want to be around for when this market bottoms out. So I'm more than happy to say I'm willing to take a loss here for the honor of being liquid, being solvent when this market bottoms out and we have enough capital reserves to be able to take advantage of some really good bargains. But frankly, if Pelosi continues to play this game, the markets are going to take out their anger on the investor. The small caps, again, It's an ugly morning, but we haven't broken down to new lower lows yet. So we're looking for points at which we say uncle if we break down, and points at which we say, aha, okay, we're beginning to see signs of life, and we're looking for a breakout. Now, until such time as we get some visibility out of Washington, I'm not ready to go dipping my toe in here. We've been very, very patient, watching for opportunities, and the real opportunities aren't going to be known until we get a package out of Washington, and we need to see how the markets respond to that package. Even if Pelosi says uncle, does she agree to a package that's large enough to do the job? I mean, we're talking about the backstopping of cruise liners, oil companies, airliners. It's going to be massive, the amount of debt we're going to take on. Let's take a look at the 10-year Treasury bond price, not the yield, but the price. And frankly, folks, I would have expected to have seen a bigger rally in bonds this morning with equities under such pressure. We were higher. Now we are retesting support yet again, and perhaps it's a double bottom retest with a higher low. But if we break, especially if we break down below, excuse me, my voice is going. and have little doubt. I was making my coffee this morning. I coughed a little bit, and I said, you know what? I'm about to say what I'm about to say live on YouTube about my quote unquote conspiracy theory about the blowing out of the numbers, the magnifying of the numbers of coronavirus. And watch, I'll be one of those jokers that comes down with it. So that's my ironic luck. So I'd be worried about. Actually, we're short of bonds right now, so I'm not going to be worried. I'm going to be looking forward to a breakdown below. What was this low here? A low of 154 spot 16 on the 10-year Treasury note. So if you see a breakdown here, that's a confirmation breakdown. We have a lower high and lower low. But again, I think we need a package out of Washington to get a conviction sell-off here. Hey, Sam, good morning. Richie, that's my luck, pal. That's my luck. Hopefully I'm wrong. It's a bit messy. 60 million of Italian on houses. You mean 60 million on lockdown? Is that accurate, Sam? Let's take a look at silver. Silver is a bit concerning. At least earlier it was a bit concerning. So we're struggling here on silver. And again, we have a long position on silver. So I'm worried about a break here as we struggle to get through overhead supply. Gotcha. Thanks, Sam. Sam, do you know whether or not you're seeing a curve down in new cases? Sam, for the benefit of other viewers out there, Sam lives over in Italy. So he's got that man on the ground, man on the street view. Are you seeing a curve down in new cases? Is it coming under control or no? Oh, good. Good to hear. All right, so yes, there's a curve down. Very good to hear. That's my developer. Pat, not seeing others comment. Richard, my son is at UCLA and they just went online for all of the classes. Yeah, I'm expecting the same here. We're in the same, Rich. I have my daughter in school. My son's in school too. It seems as if you block people on houses, the positive cases decrease on red zones. Okay. Man, I'm gonna love to hear the backstory years when the real story comes out about this disease. Yeah, Richard, stay safe, Sam. Yeah, definitely stay safe, Sam. Okay, so Silver, we're watching for a break here below support. We are seeing a trend, an RSI, which is trending up higher. And RSI is looking pretty good here. So I think that with regard to precious metals, if we get that bazooka of a package, we should see a spike up in the precious metal names. Why? It's because it's just the debt. It's just the debt. It should, if you see the dollar roll over and equities rally, you should see a spike up higher in precious metals. But right now, everything is trading in lockstep. I'm not seeing any positive divergences in precious metals. The only positive divergence I saw was the price action of nat gas of all things. It just ticked down. It was higher earlier. Nat gas, which may be putting in a bottom. You want to talk about a tell? Let's take a look at this on a weekly basis. Look at this. If we close with this outside reversal bar, I mean, my God, that's a beautiful reversal on nat gas. We would have broken out as well if we closed where we closed out yesterday or where we're trading at current or higher. So let's keep an eye on it. But if we back off and we trade back down below, what's the high here? Back down below 185, then all bets are off. This is a short covering rally. So let's watch and see how we close out the week. Do we get a retest? If we do close above resistance this week, do we get a retest of this breakout point here? And again, 185. So let's watch nat gas. Too early for me, though, to get involved. We have reports that doctors are choosing patients in Italy, not so much. Grateful listener from Serbia. Wow, from Serbia. Hey, thanks for joining in. Trent, nat gas, I think that's just a short squeeze, quite possibly. And that's what I'm worried about, Trent. I really need to see a retest of the lows, a higher low, and then to get really aggressive, we need to see, after going back to that weekly chart for a moment, a pullback, a retest of support, and then a continuation move higher above. And then I would get excited. Right now, I agree. We're probably just seeing a short covering rally, but it's the timing of that short covering rally that has me a little bit more optimistic than what I would normally be. Let's take a look at oil futures. light sweet crude. So from what I understand, the U.S. produces, there are only four producers, four, that can make money with $31 per barrel oil. I don't know how much better that gets once we start creeping up into the mid 30s. For the primary number, the consensus number is that most producers here in the States need $50 per barrel oil. So this morning, anyway, we're obviously pulling back here. We are doing a retest of the 33.50 level on oil. If this breaks, expect another leg down on oil prices. Let's go back and see how the futures are doing, whether or not we are continuing to move up off the lows. Not really, no, we've weakened up here a little bit. So the Federal Reserve likes to say they're data dependent. You know what, I normally don't say that, but right now we are really data dependent, and it's not on economic data because it's worthless right now. We are dependent upon a welfare check out of Washington, D.C. The chips got destroyed yesterday. So fears of deflation are certainly running rampant. Let's check out copper prices, which were doing well earlier in the week. We had sold off through Sunday, Monday, rallied, and we're holding the recapture of support on copper prices. But we're on pause here. And again, I think that this is the market waiting for that welfare check to try to stimulate growth. What else do we have here? Check out platinum, which was doing well a while ago. Yeah, this is all broken down. Actually, palladium, I'm sorry, palladium, not platinum. So it looks like this trade is dead for now. I would expect it to get worse. You're seeing truck sales. They use palladium for catalytic converters, and truck sales are falling off of a cliff, as well as autos. Platinum, I would expect to see the same. Yeah. So we had broken out on platinum. Now we have rolled over, and we are failing, or on the verge of failing. Yeah, RSI has broken down. Below support. Let's check out the Nikkei, see what's going on over in Japan. Looks very similar to the United States. Bitcoin. We're down about 2%. I would expect continuation weakness here. The analysis that we've done on Bitcoin is that it trades well when you have inflation, CPI rising, and right now, if anything, you're going to see a deflationary period here with energy prices coming in, and that's not going to bode well for Bitcoin. So I would avoid a current. Patrick, SPY getting a little bit of a bounce. Let's go back. We'll take a look. Yeah, you're right, Pat. So the number to watch here is 2840. We're well off that level. We need to see a close above this level here, if not a little bit higher. But 2840 at a bare minimum. And that would set the stage for a continuation move higher. NASDAQ looking the same here. All right. Richard, do you think Pelosi will give Trump a lifeline in an election year? Uh, I don't have a lot of hope, to be honest with you. I think that they despise each other, and she's pretty ruthless, and she certainly doesn't give. She doesn't care about American people. She's a politician, so unless her friends are feeling the squeeze, she'll throw a lifeline to her friends in politics and power. But to the American people, I think that they are lambs to be led to the slaughter in her eyes. So I don't have a lot of hope that she's not going to be forced to um, lend a lifeline to the American people. And I don't think that the American people have felt enough pain in her eyes yet. So if anything, they want him out. I think that the Russians want him out. The Chinese want him out. Pelosi certainly wants him out, meaning the president. And this is a means to an end. And that's the dark side of the way I'm viewing this. And unless the president can spin this crisis as being a crisis that's being exacerbated due to the inaction of Pelosi and the Democrats, and we see that Biden's numbers come under pressure, I don't think she's going to be all too willing to lend a hand. Now let's just take a quick look at the president's numbers. I mean, look at these numbers. Look at how Biden has moved up in the polls relative to the president. This is not being ignored. Here's the 30-day view. Look at this. The president's approval numbers, not approval numbers, his polling, according to Predicted. I'll give this link in the Sam, Bob, how is the situation about Corona in the USA? You're seeing sporadic instances here, Sam. I'm not a, I have my question with regard to the severity of how they're responding to this, but who the heck am I? I'm not a scientist. So are there cases being reported here? No doubt about it. Is New York on lockdown? New Jersey on lockdown? Yes. Or state of emergency, not lockdown. Uh, I'm sure there's a legal definition between the two of them. But leaving off here, folks, the president has to be seeing this. And the markets are not going to love President Biden. But he is much better than a President Sanders. With that, folks, I'm going to sign off here. If I could ask you to hit the like button, I'd really appreciate it. Thank you very much. and everybody have a profitable trading day. And just keep an eye on those support levels. Keep an eye on the news. It's all about the bailout. And any economic data that we see right now, it's old news. We're not going to know the impact of the economy until next month at a bare minimum. So, again, everybody have a profitable trading day and be well.